Us through what exactly is different this time around. Can we believe the rally?
Sure, Dom, and thanks for having me. So the big difference here is March really changed everything. It changed everything from the market microstructure of Bitcoin to really its place in the macro community and how it's viewed. And so you can kind of, I think, summarize it in that the market has changed from speculators to allocators. And so what does that mean, and how, and sort of where are the data points that show towards that? There are really two things you can look at fairly easily. One being the Google search trends indicator, which right now stands about 10. So what does that mean? That means the amount of individuals searching for Bitcoin on Google is about 1/10 that of the peak, which we saw in 2017. The other piece of data, which is more market data oriented, is really around the markets in which Bitcoin's being traded. So if you look at the ratio of spot volumes to derivative volumes from just January, so again, this shows how dramatically March changed the market. From just January, we went from a 6-to-1 ratio derivatives to spot. We're now down to a 3-to-1 ratio, and spot volumes have exploded by 200%. And so what does that mean? That means we have a much better version of price discovery in Bitcoin. It also means those are more likely institutional buyers versus retail levered buyers. And if you kind of dig a layer deeper in the derivatives market, you notice that most of that derivatives flow has transitioned from crypto native exchanges of 2017 to institutional products like the CME. And so I think really firmly indicates that retail's actually missed out on this rally this year. It's been primarily and firmly an institutional bid.
All right, so Mike, then let's take us through how, as an institutional trader, you actually participate in this market. How exactly do you get exposure? Do you just buy wholesale right now? Do you leg in? What's the move?
So you can take it any which way, right? Whether you buy a block of it now, it depends on your timeline, dollar cost average. There's an enormous amount of fiat on-ramps, which has really, in essence, created a much safer sandbox for people to play within, right? And so you've got whether it be PayPal, whether it be Square, you have even the largest bank in Singapore, for example, DBS, is now launching a crypto spot exchange. And so there are many different ways to play it. From a retail perspective, the safest and easiest way to do it are through apps like Coinbase or, again, Square. If you think about, or PayPal actually just initiated their service last week. Seamless. I tried it myself. It was fantastic.
All right, and before we let you go, we just got about 30 seconds here left, Mike. As you take a look at the way things are moving right now, what scares you the most about the price action?
So I think with any run like we've had, it's been a fairly linear bull run for Bitcoin. I think towards the tail end, and particularly as we recapture the highs of 2020, or of 2017 at 20,000, you're going to see this sort of blow off top. And that'll be really a function of speculators starting to re-enter the market. And you know, that in essence will bring us up to a level that, you know, we can throw out price targets. I don't think I'm as excitable or as exciting as the $300,000 price target of Citigroup, but we could get ourselves to $25,000, $30,000 very quickly. At which point, depending on broader risk assets, we could see a drawback. But again, I think a full rebase and a steady bid through 2021.
Okay, Mike Buchella, Block Tower Capital. Thank you very much. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.